So hands, please give a welcome to Bridget Helgerson.
It's an honor to be here. I spend my life behind a computer, so it feels really, really wonderful to be out in the real world with all of you. Thank you. So at Steward, in a nutshell, we are a financing partner to businesses practicing regenerative agriculture and more broadly in the food system space, across the value chain, across the supply chain. Our mission is to promote economic and environmental stewardship through regenerative agriculture, and our overall goal is to rebuild regional food systems. And that's really what holds our team together and what we continually come back to time and time again. In terms of our origin, many of you may know our founder and CEO, Dan Miller. He's an American, and this whole journey for him began back in 2016 through a personal relationship, as it often does. He had a close relationship with a brilliant chef in Baltimore, Maryland, a James Beard Award-winning chef. And through this relationship, he began to understand the supply chain and sourcing. This chef in particular is a pioneer in terms of local sourcing, wouldn't use citrus, wouldn't use olive oil because he couldn't get it from his region. And so Dan spent time getting to know where he was, procuring his ingredients. And over the conversation kept coming back to a lack of access to capital. I don't think that's news to anybody here. I've heard it throughout the last 24 hours. That's a real challenge. But at the time, it didn't make sense because there's such a demand for these beautiful products. The produce, whether it's the produce served in the restaurant or the actual ingredients that are gone into products sold from the restaurant, the demand was clear, and yet these producers couldn't get the access that they needed to actually sustain and grow operations. So at the time, Dan spent quite a while trying to understand the gap and understand the reasoning for this. And, what it came down to is that supply and financing is actually driven by policy and not the demand. I don't think that's a surprise to anyone either. So Dan's background was in real estate crowdfunding. He had a prior business, created the first and largest commercial real estate crowdfunding platform. It still exists today. It's massive. So he'd had that experience and understanding of aggregating capital and how to build such a company around the technology needed, the operational framework, the regulatory framework. He had that knowledge and expertise. His family has also been farming on the eastern shore of Maryland for the last 200 years, so he had this kind of deep-rooted agricultural passion as well. So all of these things married together, the question was really, how do you source and aggregate and gather that capital from those who have it, those who care, those who want to allocate it in a meaningful way, and provide it as financing to those who need it in the food system. So 2016 through 2020 was really when he took this kind of as a personal journey to try to understand if he could build something that would fill that need. And a lot of R&D, a lot of discovery. He traveled around the US, he met producers, he met growers, all sorts of folks across the industry. And in 2017, he and his family personally funded the first 16 loans that would eventually kind of roll into the Steward umbrella. And in 2017 was the first that we did. And that was a $100,000 loan, an urban farm in Detroit, Michigan, super small, 1/10 of an acre. But Dan and his family helped them buy, with that $100,000 loan, 1 acre property and expand operations, put some soil improvements into the earth, buy some equipment. And the growth in 3 years was instrumental. I think they went from $5,000 of revenue that first year to $150,000 3 years later. So that was really proof that with the right sort of partnership and the right sort of fair financing terms, like this could work. This, could validate the model. I think that really gave Dan the courage to press on and continue in this really challenging sector. So from 2016 to 2020, it was piloting a lot of different types of smaller loans to businesses across the sector. Produce, we work with an Amish dairy farmer in Pennsylvania, hemp farmers, a lot of different types of growers and producers. So that was the first 4 years of Steward, pre-Steward, and as we exist today, things really kicked off and we went public in July of 2020, so 4.5 years ago. I joined the team just before that and at the start of 2020, so I've seen a lot of change and a lot of growth in the last 4 or 5 years. I want to talk about our model. I've got notes because there's a lot I would like to make sure I cover. I want to talk about our model and make sure it makes sense. And, I want this to be engaging and conversational. So if something doesn't make sense, please speak up. In short, we source, originate, and service commercial loans to regenerative agriculture and food systems businesses across the value chain. But to fund those loans, we sell what are called loan participations. So essentially, we sell slices of a larger loan to our network of impact-driven lenders, which now exceeds about 3,000 people in the US. So we are managing 2 very different customer types. We've got these impact-driven lenders, which are individuals like you and me, and then also super high net worth individuals, and then family offices and foundations. And then on the other side, we're dispersing funds to growers, to borrowers. So 2 very different types of folks we're dealing with. In terms of the actual loans we're originating, across the spectrum as well. We've got land purchases, we've got inventory financing, equipment purchases, and construction and infrastructure development as well. Those are the 4 big ones. And how it works in practice, I don't have a diagram, but essentially a potential borrower will come to Steward, typically through word of mouth, through referrals. Our marketing spend right now is $0, so it's all relationship-based. They'll submit a loan application. We'll do a quick assessment just to understand their operations, but we'll put them through a pretty comprehensive diligence process to make sure that we as a team understand holistically what they're about and what their operations are like. We've got kind of an operational underwriting process to understand them as an operator and make sure we feel that we agree with what they're trying to do and what they're trying to achieve and that we believe in them and their operations. We have a holistic financial underwriting process, which is pretty standard, I would say, just in terms of reviewing historical financials, future projections, making sure they have a business plan. And then we'll look at things from an agricultural perspective as well. So whether they're a grower and we're actually sending someone on site to review their land and understand what they're trying to achieve, or they may be a CPG company and we want to understand their sourcing practices and where they're actually getting the goods that are going into the product they're creating. This may take a couple weeks, it may take a couple months, but it's a really holistic approach to an often untraditional underwriting process. And through that, we're really trying to address and solve 3 primary issues. First and foremost is a lack of access to capital, as I mentioned, both in the US and now hopefully globally. We're also trying to bridge that gap between consumers and producers, trying to turn a passive consumer, as so many of us are, into an active funder to better understand where your food is coming from. And then finally, to provide an opportunity to those who care, who have the funds and want to allocate those funds towards something they care about, provide them with the means to do so. Often I'm asked, why Steward? Why not just a bank? Some folks do have access to capital at a bank and they choose Steward because we are values aligned, we are relationship based, all of our loans are customized and flexible to that specific business. So we structure the loan together to understand what makes sense for that specific producer, whether it's the repayment schedule that's structured uniquely, the terms of the loan, it's all specific for that business. And we also work across the supply chain. So I've mentioned we've got producers, growers, distribution, CPG companies, processing, vertically integrated businesses. We run the whole gamut. So it's not a specific type of borrower that we'll work with. But I think mostly it's just that we are very much values aligned and relationship based, and all of this comes from personal relationships. The whole reason I'm here is because of personal relationships. That's definitely the thing we can offer most. We also provide transparency around fees, around communication. Our team is hugely aligned with the work that you all are doing here, and you can feel that. And I think the folks that we work with can understand that. So transparency and integrity is massive with Steward. In 2020, when we kicked things off publicly, in just those first 6 months, we originated about $300,000 of lending toward these types of businesses. This year, we're on track to reach our goal of $24 million, so that's 4.5 years. And in this quarter alone, it's just $15.5 million. So massive for this quarter. There's a deal live right now, actually, back home. And next year, 30 million. So going from 300,000 to 30 million in just 4 to 5 years is huge. We are continually, as a team, blown away by the enthusiasm from our lender community of about 3,000 people. When we put a campaign live on our platform, it typically sells out in minutes. Just to give 2 quick examples, I think it was in October, but we put up a campaign for $2.2 million to a company using black soldier flies to process pre-consumer waste and create soil amendments and larvae for livestock feed. This was $2.2 million, and we were able to raise that in 59 minutes. So people are waiting on our platform. There's so much enthusiasm that we send an email, and all it takes is one email. We send an email out and say, this campaign is going live at 12 p.m. on this specific day, and people show up and are waiting on our website to support these businesses. Another example is a CPG company. They source regeneratively grown buckwheat and other grains and produce snacks that are sold across the country in massive stores. And this was an inventory financing loan for $1.25 million, and that sold out in 7 minutes. So just the growth, the first loan we originated 4.5 years ago, as we exist today, was $5,000, and that took 2 weeks to fund. And we really weren't sure where this was going to go. And now these deals are selling out in mere minutes. It's remarkable as a team to witness as well. We started really small in terms of the growers we were supporting. And, the 1 acre farm, the farmer's market garden types farms, we're really scaling up. Those will always be the types of businesses we value, and we will continue to support small businesses. We've also started to understand over the last couple of years a larger need for more regional scale impact. And so we've shifted the types of businesses we've supported as well. I'll give 2 examples. One some of you are familiar with. Old Salt Co-op is a vertically integrated livestock business in Montana, and we've been with them from concept to creation as a real financing partner. So it's not just about us originating a loan and providing the funding. It's partnering with them along the way, from ideation unto creation. So this is where 4 fifth-generation livestock ranching families have come together to create this vertically integrated model. And we've helped them create the concept as a partner. We've helped them build the infrastructure, livestock processing, restaurant, butcher shop, retail. And they've now created this beautiful model. They're definitely a showcase partner of ours. They're beautiful people behind it. And that's so much of what it comes down to is the relationship we've created with these folks from the start. And they're massive, hundreds of thousands of acres just compared to how we started with a small 1 acre urban gardener. Another example is a craft flour mill called Cairn Spring Mills. They are based in the Pacific Northwest, in the Skagit Valley in Washington, and their flour is used by the top bakers throughout the U.S. They're sourcing from regenerative grain farmers, and their impact on the community is massive. I had the fortune to visit their operations in the last month or two, and the ripple effects are paramount. It's not just the product they're creating, but it's the impact they're having on the team and on their larger region. They've provided just the economic opportunity in terms of job creation for this community. And Cairn Spring is another one of our showcase partners. We've helped them with inventory financing, so each December we will issue them a 12-month note. They purchase all of their grain for the following year in December, and then through sales the next year, they'll pay down that 12-month note. And Cairn Spring, everybody in the US knows about Cairn Spring, and so these deals are funded like that. And just the support that shows up on our website for these businesses, again, continues to blow us away. So we help them with inventory financing, we help them with equipment purchases, we help them create a palletizer in the last year or two. And even more so, we've been a strategic partner from an advisory perspective as they are trying to build a new mill, this one in eastern Oregon, which would 10 times increase their production capacity. Right now, they're at about 8 million pounds of flour per year, and this would enable them to produce 80 million pounds. So again, the scale is massive. We're supporting businesses on all ends of the spectrum, but we're still supporting the market gardeners, and we're wanting to support these massively impactful regional scale enterprises. Many of you may be wondering why I am here in Australia. And again, it all came to relationships. One of Steward's early investors 4+ years ago is an Australian family office, a very much values-aligned family office. And through this relationship, we were able to create partnerships with Sustainable Table and Sprout Tasmania and really start to explore and try to understand the need and the market here in Australia. It's really been the past, I'd say, 12 months where things have started to fall into place. And, we've just funded our first international deal here in Tasmania. The need is global, lack of access to capital, lack of access to land, consolidation, lack of funding for small infrastructure. I've been hearing it my entire 10 days in Australia. It feels very much like home in terms of the challenges and issues we're all experiencing. So I could keep going, and I thought, it's one thing for me to sit up here and tell you what we've done and tell you what we can do and what we hope to do here in Australia, but I thought it really would be most compelling to hear from one of your own, which is Feld's Farm, Mike and Lauren, who have been graciously willing to join me up here and just really share their experiences working with Steward. So welcome up here. I don't know if you want to kick things off and just brief introduction.
Yeah, sure. Do you want to do that or shall I? Okay. Hello, everybody. My name's Mike. Lauren and I grow vegetables in an organic system. We started our farm literally in a backyard on relatives' land in Baghdad in the Midlands of Tasmania. We were chefs originally, and the garden started because we just wanted to have our own vegetables at home. Before we knew it, we had way too many vegetables. We started taking them to work, and then other chefs who are friends of ours in Hobart and around, where can we get some of this stuff? So the garden just grew year by year. We started off on a backyard, then we went up to a 1/4 acre, then a 1/2 acre, all on leased land. So our first spot, then we had to move farms, so we moved up to a different site up north. That was where we grew to an acre. We started doing weekly farmers market, continued our restaurants. Then COVID happened, so we switched to a veg box. And now we are farming across 2 sites, although one of them is being shut down, as we anticipate moving to our new site that we've just purchased with the help of Steward. Um, yeah, sorry.
Why Steward? But really, you mentioned to me previously, like, you could have worked with a bank. And so why didn't you?
Okay. So owning our own land has been a dream of ours ever since we started this journey. Lauren and I really just took like ducks to water to being on country and, working with our hands in the soil. But, starting in a backyard, we literally started with a couple $100 and a wheelbarrow and a shovel, and we just had to reinvest every year. It was quite obvious that the banks weren't interested in the beginning, because the numbers, although we've made a profit since year 1, the numbers are very small, and we've just gradually built each year. It wasn't until the last year where the banks actually started to take us seriously. But the reason we're partnering with Steward is about the relationships. We don't just grow vegetables for a financial gain. Like, everything we do is about the relationships with our CSA customers or our restaurant customers or our neighbours or our landlords, or everything we do is about relationships. And we actually started talking to Steward about 1.5 years ago, I think, for another property that we thought was the one, and wasn't. And so that process started then, and instantly Lauren and I were like, this organisation is actually, they're going to believe in us and going to support us, and that means so much more to us than what a bank manager will say, or
Yeah, no, I'd just like to add, we haven't had wholly negative experiences with banks, but they are incredibly conservative when it comes to agriculture, as I'm sure you guys all understand. Although they can see your projections, they can see your past history, they can see that you turn a profit every year, year on year. But they're still incredibly nervous because they understand the challenges of climate change. They understand the challenges of just season to season based work. And they also understand that access to agricultural land without a dwelling in particular is a big risk for them. And whereas Steward completely understand all of those challenges, but actually see it as a really positive thing for the community on a very long-term vision, which I really, really appreciate, because we are not farming just for the next day. We are farming for generations to come. And Steward really, really understood that this was something that we don't want to just fulfill for ourselves, but for the future as well, and for the future of our communities. I'm from Melbourne originally, Michael's from England, but when we landed in Tasmania, we felt immediately home and immediately embraced by our community here. And yeah, I think we're eternally grateful to Sprout and Ollie from Sprout for introducing us to Steward in the first place, because we didn't actually think that a company like this existed in the world. And it's been a real joy, even if it has been the guinea pig stage for both of us partners in trying to navigate like all the regulatory differences and even the jargon between the US and Australia. It's actually been a joy for the last 1.5 years of collaborating with you guys and telling you our story, and I guess having people who are on your side. They really want you to succeed. So, yeah.
Yeah, and the fact that it's, there's a pool of lenders. Like, the morning our project went live, I was having my coffee reading the 160 odd names of people that had donated from $100 up to 50,000, and there was all these wonderful messages of support. And so yeah, it's just a bit more than just going to the bank and getting a mortgage or a loan. And for us, those values alignments mean more than all of it, really. Yeah.
So right now, all of the lenders who participated in this loan are US based. Some wonky regulations exist here whereby equity crowdfunding is permissible, but debt crowdfunding is not. And so that is something that is a separate conversation in terms of policy change that will need to happen. Gracious to you two again for being the guinea pig with this. But for now, our loans are funded by our US network.
Which I must say is incredibly heartening. Which I must say is incredibly heartening. I mean, in the drudgery of farming some days, you can feel pretty down and out when things go wrong. But another great thing about working with you guys is just seeing the humanity that exists around the world, and that there's a wider global community. It's not just in Australia where this is an issue, but also that there are solutions.
Yeah. Yeah. Yeah, so just in terms of our underwriting process and how this perhaps is legally structured. Yeah. So Steward acts as the intermediary and we facilitate this relationship. So we sign a loan agreement with the borrower, and we worked with Australian counsel to create those documentation. And then we separately sign loan participation agreements with our lenders. So legally, the lenders don't have a direct relationship with the borrower. It's all facilitated through Steward. Yeah. Yeah. So the question was around security issues and how we manage maybe defaults, so to speak, just general risk around lending to these types of businesses. Remarkably, our default rate is less than 1%. So on a loan book of 50 million, we've only had one default that was about $35,000. And that's because of the relationship that we build with the borrower. And we do so much more to service the loan to avoid a default. So it's very common where a borrower will experience challenges. That is going to happen. But they feel comfortable reaching out to our team to say, this is what's happened. My monthly payment's going to be delayed, or this event happened on the farm. I'm not going to be able to make payments for the next 6 months. Can we talk about it? And so our team will gather and review what's going on and really try to understand if there are things that we can do to address that specific problem. But we'll often modify the loan terms for a specific period to help with those issues. So there may be a period where we switch to interest-only payments, or we pause payments altogether until the operator can get back on their feet. We go to our network of lenders who actually supported that specific loan to seek approval for that modification, and it is always approved because of that transparency. So it goes both ways. The borrower may come to us and say, I can't make payments this month. And then we go to our lenders and explain what's happening and explain what's really going on in the business. And there's so much support. They appreciate that we're communicating and passing that through to them, and therefore it's well received, and we go through with the modification. So that happens not infrequently. An outright default is very uncommon.
And I guess just to, in answer to that question from the other side of the equation, the due diligence process has been an amazing experience for us. It's so much more thorough. Look, it was a challenge in some place. But overall, in comparison to, say, the conversations and the due diligence that we've undertaken with banks up until the point of lending, it has been a much more transparent, open, collaborative experience. They actually do due diligence on our sites and actually look into every facet of our business rather than just our books and all of the numbers. And especially earlier on in our journey, I guess it really puts you off when you are very small and you are growing and people just go, you're not big enough yet. Like, just come back to us when, you're a bigger deal. And I really appreciate a company that's like, no, we're going to take this risk with you in the beginning and watch you grow with us. I really like that. That's something that we've done with our community, just from a level of like customer to us relationship level. Yeah.
And correct me if I'm wrong, but when you did look at all of our books, there were some really positive comments about just how strong our books look, and so obviously the banks see that too. So yeah, we're not here to bash the banks or anything like that. It's just, for us, all of this process and why we do what we do every day is about, first and foremost, relationships, whether that's with people or the land or our money or so that's
This model is, it's extraordinarily welcome for all of us who run businesses which prioritise, the well-being of the land, the well-being of customer health, and food security, all of the issues that we care so much about. But I also run a business in which relationships and the work involved in managing all those different aspects of relationships is a priority, and it's onerous. It's really, it requires a huge amount of work. It requires a lot of labour, a lot of time, a lot of commitment, and it's very difficult to get a transactional value or return for all of that work that we put in. We accept that because that's the nature of the business we want to run. It's a commitment, it's philosophical, emotional, value-based, etc. But I'm interested to know how Steward, as a business, actually manages to run a successful financial business. Because yesterday we had the session with Mike Van Niekerk, who works with Impact Investors, and Carmel from the Commonwealth Bank. And we were talking about the model which exists. And you're offering a slightly different version, a different expression of the model. But you're still working within a framework, which is the conventional financial marketplace. How do you manage to invest so much in these relationships and these additional sort of value-added components of that relationship and run a viable business within the marketplace? Sorry, that was a long question.
No. So the question was, how do we manage to invest so much time, resources into these relationships, into originating these loans, and actually make sure that Steward itself is sustainable and viable? We are not yet profitable. We have that trajectory that will be the case in the next 12 to 24 months. But we've received our own external financing for the first couple years. So we have our own cap table of over 100 people. Kind of a similar model where we've really opened our doors to values-aligned investors who want to purchase part of Steward and join our movement. So our cap table is just values-aligned individuals, family offices, foundations. We did not go the more traditional venture capital route. So we've been receiving external financing to date. We've had, I think, 3 profitable months in the last 12 months. So we're certainly on that path. But in terms of transparency around fees, so we charge an origination fee, a one-time fixed fee on the overall value of the loan. And that's built into the loan itself. So that's capitalized into the loan. We also charge a servicing spread on the interest of the loan. So if the interest is 8.5% that we charge the borrower, we'll retain 0.5 point and pass through the 8 to our lenders. So that's just a recurring source of income that'll grow over time as our loan book grows. But, with our origination fee is really the primary source of our revenue, and that's fixed based on the value of the loan. And so, of course, the larger the loan, the larger our fee. So we're not yet profitable, but we will be. We're a very small team. We're very lean. We're 8 people in total. So just in terms of our operating expenses, it's 90% employee.
Can you talk about the deal structure? Is that
Yeah, for this one? Yeah? Do you want to do a little bit?
Sure. So we're purchasing a 100-acre property. So the way we want to farm vegetables and the way we believe we should be farming vegetables involves long rotations, cover crops, perhaps bringing animal impact in as well. And so our once ideal of like an acre market garden is now looking more like 25. Not all of that will be in production at once. And also the demand out there, we can't grow enough vegetables for the people that want them, which is a really good problem to have. That said, most of the property is bush, and it's stunning. And so we're going to look at ways we can utilise that as well. Part of it's actually under a protection. We have no intentions of clearing land or anything like that. We're going to look at sort of agritourism and things like that. So the land price was 625. We put up a 25% deposit. So Steward is funding the remainder of that. The loan payment schedule is over 20 years. But there's a 5-year term. And so there's no penalty for early refinancing or early payouts or anything like that. Essentially, at the end of that 5 years, we either refinance with Steward, a bank, or maybe we pay it off. Who knows? That's the goal. Yeah. The interest is 8.5%. The risk on our part is that we are paying back in US dollars. And so, we are beholden to the economy over there, and hopefully our mate tanks it, and, it'll be good for us. But even still, all, like, jokes aside, we are absolutely, that was a joke. We're so comfortable with that because, Lauren and I aren't very, when we're happy to take risk. This whole journey has been about risk, why not? And if it does go wrong somewhere along the way, well, then we know that we can talk to Steward and go, look, this is happening. What can we do about this? That's ultimately why we're happy to take this risk and be the guinea pigs. This property that we're purchasing has a very large dam. That's it. There's open ground. There's no house. There's no power. There's nothing. So it is a big project. It's a blank slate. Steward are happy to take that risk with us, which, yeah.
I was just going to say that going back, that's something that wasn't unattractive to Steward as well. Whereas a lot of other lenders, both private lenders, but also the banks, that was a very unattractive thing for them. So again, the values and the understanding of the integral business that we're doing has played a really important role for us.
What's the structure of the first year?
So we've got, so the first year, we have 18 months interest only. Yep.
And just to highlight that a bit more, when I say our loans are flexible and customized to the specific business, every borrower's repayment structure is different. Sometimes the whole thing is interest only. Sometimes it's fully amortizing. Sometimes it's interest only for a period and then amortizing over a longer period than the actual term of the loan. Sometimes we'll build in an interest reserve period whereby the first 12 months of payments are actually capitalized and built into the value of the loan. And so the borrower's not actually making any payments just to help with cash flow. everything's really unique to that specific business.
I'm curious with like not-for-profits or community-based projects, if you've funded any of those and if there have been concessions for those types of organisations in terms of reduced interest or zero interest loans. I understand that they can't be like a big bulk of what you do, but is that something you've explored or currently offer?
Yeah, so in terms of how Steward is structured, we have our primary entity that is our commercial lending arm, and that's the one that originates these commercial loans. Separately, we have a nonprofit ourselves. We have a foundation. So we have issued a couple zero interest loans through that vehicle as well. And so our foundation will receive certain grant funding, and then we'll further that into impact loans to those types of businesses.
So it's more of like an auspice rather than like you're auspicing grants through to that party rather than getting money from investors.
Exactly. Yeah. So our foundation arm will receive a $50,000 grant for us to use as we choose, and then we will originate a loan, a zero impact loan to a specific business. Yeah.
So I'm curious, so you mentioned that, you deal with quite small growers and market garden kind of size, right up to, across a region, I guess. And you mentioned regen ag, so what's your criteria? What do you say no to?
That's a good question, and something that we grapple with a lot internally. Oh, yes. The question was, I guess, how do we define or consider regen ag, and what are our parameters or qualifications that help us determine the type of borrower we'll work with? Thus far, we've had a very comprehensive 2-page definition of regenerative agriculture and the principles that we define in our loan agreement. And so every borrower who signs their loan agreement is meant to adhere to these types of principles. And yet, over the past, I'd say 2 years in particular, we've really started to understand that that's not necessarily applicable to everyone, and it's a bit too rigid and it's a bit too stringent, and you can still be doing really wonderful work and moving in that direction and not doing these exactly specific practices or principles that that we are making you sign an agreement for. So it's in process right now, actually, but we've engaged with a consultant to help us redefine that into a broader understanding of stewardship that it's so much more than just practices, and it's more about community impact as well. So it's environmental, yes, there's some of that, and it's financial, some of it. There's economic impacts on your community, but it's the people you're working with. So it's a much more holistic assessment, I think, of that specific business, and not so focused and honed in on practices.
And just due diligence around, you guys sitting out Tanya for us, for instance, just to make sure.
For the site visit. Yeah, and so part of our diligence process, especially in Australia, it'll include a site visit. So we sent out Tanya from Sustainable Table to get on the ground and try to have that more holistic understanding of what they're doing.
Hi, one of the things that Regen Labs, who I work for, is working on is place-based funds that do loans, working in the hills and coasts in South Australia, and it is going to be debt loan structures in that place. I'm just curious about that kind of approach. I'd love to learn from or with you how might we think about structuring loans that uplift a whole place and a food system in a place where you may have different enterprises and entities. You may have a chicken farm, a food processing piece, a food hub, and looking at a loan book that might be able to support that whole system. That's the kind of thing that we're kind of working on, and then the capability building and uplift that might be through that grant kind of mechanism that works alongside the loan function. Just curious whether that's coming up in the US context or whether that would be something of interest in the Australian context.
So the question is around placemaking and working with a variety of different types of businesses in a specific region. Yeah. and thinking about the impact across economic, social, environmental sectors. Yeah. I think that's exactly what Steward is doing in the US because we are so regional focused. And it's all referral relationship based. So we'll be working with the flour mill, who will then introduce us to the growers in their region, who will introduce us to someone else. I think innately this has been happening where, like the Pacific Northwest, where I live in particular, has become a massive hub for Steward because we've been working with so many different types of businesses through a referral-based system in that specific region. And those are the exact parameters we pay attention to just through our natural underwriting process, are the economic, the social, the environmental impacts of each of those businesses and as a collective whole. So definitely something that we would be interested in exploring here.
Can I just add something to that? Already, I've had 3 different farms reach out to us about our process with Steward. All of them are from the States. And so it's, it's just like the community will do the work as well, and tell people about it. I just thought that was really interesting that people that are already in America have asked us in Australia, what's the go with Steward, and, yeah. Just wanted to add that.
That's interesting.
Do you do exclusively business loans, or do you also do re-granting to not-for-profits where obviously they don't have to pay it back?
Exclusively commercial business loans, but one that's become more common that's interesting is a handful of our businesses will have been awarded a government grant from the USDA. So that's more or less guaranteed and backed by the US government. And yet it's often the case where they are required to spend those funds up front before receiving the grant, which makes no sense because they don't have that cash to begin with. And so a handful of our more recent loans have been essentially a grant reimbursement loan where we will upfront the cash to that specific business so they can spend the money to prove to the USDA that they've done so, and then they receive the grant and then immediately pay us back. We just did that with, I know it's kind of silly, and we just did that with the black soldier fly company I mentioned a bit earlier. They're actually in Oregon, so I did that site visit. And that was the $2.2 million loan. And so we told our lenders, this is going to be short. The payback period will be short. We allowed for 6 months just in case there were some delays. It was less than 60 days. I think it was a month later they received the funding back. And so we passed that straight through to our lenders.
That vertical integration model, the old Salts code, is really inspiring because I think one of the problems we have in Australia is that for livestock farming, for example, we have a problem with abattoirs and the whole meat processing industry, and a lot of farmers are really keen to try and get more control over vertical integration. But it's that bringing together groups of people so you can be more powerful together, which is kind of what the Salvador is talking about as well. Are you exploring that in Australia as well?
Yeah.
Or is that something you're open to?
Yeah.
The geographical, the dynamics of this marketplace is so different from the US. Tiny population, spread out, big, like it's such a different picture.
Yes, and yeah. So the question was, are we, in terms of vertical integration with referencing old salt in particular and just livestock processing, more and more in the US and in Australia, there's just a need for processing capability. And so what does that really look like with Steward? And is that something we'd be interested in exploring here in Australia? And the shorter answer is yes. I think it's in both countries. It seems to be global, just that interruption in the supply chain, and that is a massive obstacle. We've identified that in the US, and I'm slowly learning over the past week here as well that that's absolutely existing here. I know kind of the smaller scale processing facilities and mobile abattoirs are very much part of the conversation here. They are in the US as well. I don't have the answer, but that's something that's certainly on our radar.
I'd just like to add, like as a broader thing, I think one of the benefits that Steward in talking to us has been is, whoop, dogs want to talk. One of the benefits is just, I guess, they look at the business as an individual business. And so therefore, if you want to integrate vertically, if you want to, the options are quite endless. They will invest the time to understand the type of business that you're looking at within your community constraints. And I think them sending Bridget here on behalf of Steward to actually see how small a community Tassie is really in the global scheme of things, but also seeing how incredibly tight-knit and close connected we all are is really, really important to like looking at the business on the whole.
And just quickly on that, we have a lot of businesses who come to us thinking there's one need, and we end up going in a completely different direction. So folks may submit a loan application for $100,000, and it becomes a much bigger conversation and a much bigger project. That happens time and time and again. So again, we partner with these folks to really understand their needs and help them see what their capacity can be.
And for us as well, we've had that experience on a personal and business level. When we did the Sprout producer program in 2018, we thought we were going to join that program to learn how to grow vegetables. Turns out we knew how to grow vegetables. What we really struggled with was succession planning, was access to land, was learning how to do our books correctly. And Sprout made us realize we had all of these other things that we should be tackling. So, yeah.
Does the legal system allow at the moment for us Australian value aligned peoples on the other side of the coin to contribute to Steward's funding side?
No. So for retail folks like you and I, no. For the larger high net worth family office wholesale investor, yes. 1 per deal. So right now, these will all be funded through our network in the US. But in terms of ways that you can get involved and help, we really are looking for more businesses that need support, that need access to capital. That and any wholesale funders out there, yes, relationships. But also on the ground support, as our exposure here grows, we're going to be doing more site visits. We're going to need more underwriting capacity. The team will need to get bigger. We'll need more resources. So it's providing support in these other ways that would be super helpful. Yeah. Okay. Thank you very much. And thanks to Mike and Lauren.